Good morning to all subscribers of the FutureTrend channel. Today is 3rd May of 2018 and we start our analysis of major currencies. Of course, the number one topic discussed at the moment, that's the Fed's meeting that took place yesterday. What's important? What is the result of that meeting? Of course, the most important decision, the most important factor is that, as it seems to many market participants, the Fed right now is not so aggressive as some investors thought. That means that from the point of view of solid economic numbers coming from the United States, they will not immediately translate into higher interest rates in the United States. That means that you can see this in the statement of the Fed, that even now the Fed members ready to tolerate the higher consumer price inflation in the country. That means that they have a kind of targeted level of 2%. But from the point of view of 12 months horizon, I mean, if we take into consideration the trimmed inflation numbers, that means that the Fed members at the moment are ready to tolerate even a slight overshooting of this level. That means that even a high interest rates in the United States will not immediately translate into higher interest rates in the country. I mean, into more aggressive policy conducting by the Fed. And from that point of view, probably the United States dollar is looking a little bit overbought at the moment. That means that we suggest that in the nearest future, probably the United States dollar is ready for a kind of correction. And from that point of view, we decided to still keep our short trade recommendation in the dollar Swiss as well as in the dollar yen. Probably it's already the sterling should be ripe for a correction, because, as you know, in the middle of April, the cable traded around the levels of 143.77, the maximum, the highs of this year. But now it's very close to cross its moving average 200 daily line located around 135.35. So we have all in all around 8 big figures of losses the cable seen during the last 2 weeks. From that point of view, particular importance we should pay to the incoming economic barometers. United States economic barometers, and the labor market report scheduled for this Friday should take the first place in this row. Any kind of deviation to the worse side or in United States economic numbers, for example, if the unemployment rate will pick up, or for example will tick up, I mean, or for example the absolute numbers of employed workers in the United States will decrease, or if the average earnings index also ticked down, that means that that will present a kind of negative surprise for the future of United States interest rates and for the dollar itself. From that point of view, we are ready to see a kind of correction, consolidation in the dollar price looming till the end of this week. Thank you very much for all of your attention. We will not publicate some other reports today because the market is a little bit stable right now. And we will come with a new report tomorrow in the morning. Thank you very much for your attention. Once again, it was your FutureTrend channel, and bye bye for now.